And good morning. What's going on? This is Travis Witherspoon from Carter Cow Capital, Carter Cow Trading on YouTube. Hopefully everybody's doing very well. Trade with Travis. I'm sorry, Trade with Travis on YouTube. Hope everybody's doing very well. Let's go ahead and get through this disclaimer. I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk, that involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to make money today. So with that being said, uh, I'm not showing myself on the screen again today. What we're going through is I'm going to end up going through and taking a look at the overall charts. Hopefully everybody's doing very well on this Tuesday morning. A lot of stuff happened yesterday. A lot of quick movements happened yesterday. And we have to pay attention to what's happening with gold and silver. I think we're probably going to end up starting to see a little bit of consolidation. If we're going to start to see a little bit of consolidation, uh, that may mean that we have to find pairs that's going to end up putting us into better positions. It's a lot of stuff that's going out. Very excited to be able to talk about it with you, and that's what we're going to end up doing today. Like always, if you like what we end up doing, please make sure that you end up liking the Carter Cow Capital business page. Please make sure that you end up subscribing to the Carter Cow Capital subscribing with Trade with Travis on YouTube and Carter Cow Capital in general. Also, make sure that you end up going to cartercowcapital.com/start here if you're interested in being able to get a free webinar and be able to go from there. So let's talk about what's happening today. The above news ended up saying the pound rises above 1.3350 amid Brexit hopes. You could say that as one of the catalysts of why it's moving, but we're going to talk about why yesterday when we end up spotting out the support and resistance zones, we're pretty much dead on where the spot actually was. So that's what we're going to end up focusing in on as our first U.S. based pair. The biggest news, once again, is stimulus checks and what's going on with Brexit. Both of these are going to end up being the news that's going to end up impacting the next 10 days of overall trading. And we just have to understand that when it comes down to being able to figure out what's going on for the overall movement. Once we end up figuring out that and getting an idea about what's going to end up happening, then after that, we can be able to make an informed decision on how to be able to trade it. Now, what happened earlier yesterday, remember, they didn't have that much news when it came down to Westpac consumers and meeting minutes, but Pfizer also ended up saying that they was able to roll out or trying to see that they can roll out another 100 million dosages for everything else when it comes down to the COVID vaccine. And talking about how they can be able to get over. Also, Joe Biden has won finally the electoral college and is finally considered to be the new president. So we have to be able to focus in on that when it comes down to overall movements, S&P, US 30, and everything else like that. We want to be able to look at movements for us being able to buy over time. So let's get into it. Let's see. Earlier today, the pound ended up having climate count change, unemployment rate, and average earnings. That's pretty much like their non-farm payroll. And going from there, Chris, what's going on with you? Hope everything's going well with you, big dog. And being able to take a look at that. Governor Macklem is actually going to end up speaking a little bit later on today when it comes down to the Canadian dollar and being able to see what's happening with that pair. The Australian dollar is going to end up having Commonwealth banking services, and pretty much the rest of the day is going to end up being somewhat light. So just have to pay attention to that. All right, here we go. So let's take a look at the big three. You don't know what the big three are? That's pretty much the U.S. dollar index. So take a look at gold, and then after that, we take a look at oil. The reason why we do those pairs is because they tell us and they correlate very well with what's going to end up happening with the overall underlying pairs. So when we look at the U.S. dollar index, we're paying attention to what's happening with the U.S. dollar and seeing what's going to end up happening with the overall movement. Okay, so taking a look at the U.S. dollar. What's the overall expectation? We still expect that the dollar is going to end up falling down to the weekly D extension, which is down to 11,565. We also know that there's a D extension at 11,677. So overall, the market is still going to end up moving down from this original point when it comes down to this overall movement. We talked about this almost 2 weeks ago, and this played out the exact way that we end up expecting that it was going to happen. The stochastic was going to end up rolling over, curling over it again. Then after that, starting to push back up. Once we end up getting that high movement, when it came down to the overall stochastic, that's when the big drop was going to end up happening. So you have to be able to pay attention to that overall movement, because that's when the U.S. dollar is really going to end up taking a little bit more of a dive. So we're just trying to see if we can be able to get a little bit higher of a price and look to be able to sell on the overall pairs that we're talking about underlining for us being able to go from there. Now, this can all change based off of stimulus talk. This can all change based off of Pfizer news, but I think that's more based off of the indexes and more stocks compared to actual underlying currency. But we have to be able to pay attention to that. But even still, U.S. dollar is still considered to be bearish. Taking a look at oil, got rid of some of my oil. Trades. I actually ended up winning. I think about $70 based off of that movement. The last time we ended up taking a look at this, currently right now, oil is still at $46. We've been talking about being able to get in. I only want to focus in on the 2 hour on this move. We talked about being able to get in based off of a counter trend line break. If you could be able to get in, we end up getting in off of that move, and then after that, it basically slammed all the way back down to past resistance, turn future support, and then push right back up. So what does that mean? That means that oil is probably going to end up pushing up to the upside for this overall movement, which means that we should be paying attention towards long-term growth and long-term movement towards the upside for this overall pair. So that means that if you did not get in as of yet, do you have a chance of being able to get in? Hypothetically, yes. You can get in at $47, trying to go up to $48.51. My stop loss will be a little bit tighter. We know that the market has fell down to this overall support level again, and then after that found support below that. If you want to place your stop anywhere, if you want to be somewhat, you want to be aggressive, I will place a stop just below the actual swing low at 46.30. If you want to be a little bit more comfortable with the overall movement, I'll place a stop between $46, which would give it a whole dollar worth of overall movement that you can be able to work off of before this move actually end up paying. Off. So that is what I will end up paying attention to for the overall movement. Everyone, give me 1 second. Testing. All right, testing. Okay, so we're back on. Let's see. Do we have any questions? Nope. Okay, so going back to what we ended up saying, if you want to sit up there and take a buy, I would take a buy. I would actually take out some of the risks on being able to do that. Take profit once again will be 48.71. I've been trading this based off of my EA. If you don't know what an expert advisor is, basically what it does is that in this case, it looks at swing trades based off of this overall movement. Anytime that we end up getting a crossover between moving averages, it ends up entering in a trade for us. Every time that this market is crossed over yellow or white, basically what happened is that I end up placing in an entry. So we end up getting a yellow or white entry right over here. When the market end up exploding up, end up making $100 off of that. We end up making a move right here, end up basically making $30 off of that. Took a short loss on this move when it ended up going to the downside, but overall, we're looking at over this being able to long trade. I actually ended up turning off my system on this one a little bit earlier, just because I didn't like that small little consolidation movement that ended up happening. But even still, with that being said, the market is in the buy zone. And quite frankly, if you wanted to be able to buy this manually, you could be able to do this right now at this particular point. But you have to hurry up because the market's already done moved 24 cents over the course of the last few minutes that we have done that. So once again, let's talk about stop loss. Stop loss, if you're being aggressive, you can place your stop loss at 46.30, 46.30 for that overall position. Take profit will end up being 48.71. If you're looking at being able to do this long term, then that means that you're going out to 50.90. That will mean that your risk reward will end up making sense from that point moving forward. So you're talking about 363 pips from here with a 96 risk. You're going out to this reward right here. That'll be 133 for 96. That doesn't make sense to be able to get in at this particular point, and that's the particular reason why I'm staying out of this overall pair. Okay, so US CAD could move up today. Could have a strong move up today. Who knows? It's had strong pushes, but it's been in consolidation so much that, quite frankly, if you don't catch it at the right point, for me, it's not worth it at this particular point. So I'm out on that pair. Let's take a look at gold. And my EA for its gold has been hitting on this position a lot for us being able to get in. And that is kind of worrisome from me because I'm kind of looking at this from a daily perspective and and then after that, focusing in on what's happening long term. Obviously, we know that we want to be able to buy long term. We want to be able to buy up to first off the 1965, which I think is going to end up being a strong area overall movement. Then after that, 2073. Then after that, 2300. So we're trying to load up on buys with this overall position. We can see the market is basically in the no trade zone for us where it is right now and being able to trade it. And we've also seen that this market has failed down to support at 1823 and started to move back up. So it's turned into a natural support area. If this then turns into a natural support area, then what we're looking at is that this market has found an area where it's going to end up retracing. And now we can look at what the market is going to end up pushing up. So basically it's went down to almost a 5-0 position. And for some reason, this market really loves going down to the 5-0 retracement level before making a move to the overall upside before actually pushing up towards that overall position. If that does happen, then that means that the market will go up to 1943, back up where it ended up making that huge move to the downside the first time. Now, what would be a reason why this actually ended up making this move like this? Well, remember, gold is more of a safe haven type currency. We're talking about anything that's fearful when it comes down to the U.S. dollar, the overall U.S. dollar economy going down. We look at what's happening with other underlying currencies like the Japanese yen, the Australian dollar, and what's happening with those currencies. If both of those are actually going down, then that makes gold basically go back up. We're looking at all of the metals, and we're saying that we expect that all of them are going to end up going up over time, force being able to push up towards those levels once again long term. So any kind of trend line break to the upside means that, quite frankly, we just want to go ahead and take the buy and look at being able to trade it from where we are. Right now, we do have a counter trend line break, and if it remains to be this way, then we're looking at buying long term towards this overall spot. So we have to keep that in mind when it comes down to this overall movement. Once again, just look at being able to load in your buys long term. Also protect yourself to the downside if you can be able to hedge. Right now, is there any type of direction to be able to trade this off of? If we look at the 2 hour, the first thing that I would initially say is no. The reason why I would initially say that is because we want to focus in on what's happening inside of this area right here. You focus in and look at what's happening in this area right here until this market actually ends up breaking out of this small little consolidation, which it has before, but it seems like it's falling back in within this overall range. If it breaks out of that overall area, then absolutely let's look to be able to buy. Let's look to be able to buy more. But if it falls down to support, it's going to fall back down to 1823. If it falls back down to support, then that means that you can be able to get better value. What do we see? We see that the market is actually in the sell zone. That means that we could look at this market just steadily falling down about 20 points all the way down to this level and being able to get out. Now, if the market pushes up, then that means that it's going to start making its move up to the 1843 area that we was talking about. And for this 2 hour stochastic, it means 1906. Also, either way to remember that when the market breaks the inner trend line, it's going to end up going up and gravitating toward the outer trend line. The outer trend line is right around this overall area. So we should be looking at somewhere around there. Okay, so gold is in consolidation. That means to me, I'm not necessarily looking to be able to trade that. Now, the biggest indicator about how the market has been moving has been basically silver. And if you've been able to get into silver for its buys, then that means that you've probably been killing the market for its being able to get in towards the upside. Because right now, we talked about this overall channel towards the upside. And I'm actually interested in being able to lock in and being able to get into more pairs of silver right now at this particular point because of that very reason. Because we've seen that it's had natural support that's basically going to move down at this particular point. The market is starting to get towards the buy zone. If this holds that natural support, then the market will start moving up towards $28, for the overall pair. If that does if that potentially happens, then now we have a good sized move that we can be able to get into, basically getting $4 an ounce off of this overall pair. Anything right around the 24 area, I think is a very good pair, situation to be able to get into. Right now, that's how we're paying attention to on seeing how this market is going to end up moving. for it being able to go to the upside and then after that trading up. So I am interested in being able to get into that at this particular time based off of that movement. I do like silver towards the overall upside. There's nothing in here. I can open it up, but there's nothing in here. See? Do you want water? Okay, everyone give me 1 second. Let me give my son some water. Okay, sorry about that. Here we go. So, silver, what are we looking at? We're looking at being able to buy. Overall, the market has already started to make a move to the upside. Counter trend line has already done broken. The market is not in the buy zone, but we're at consolidation. We're at consolidation support. If we got in yesterday, we would have been up pretty much on this overall position. But if we pay attention to the 2 hour, we can see that this market has went back up to overall somewhat of resistance highs. And we're looking at the same thing. We're seeing that little small consolidation area where 2380 is that overall number to be able to get in for is being able to buy. If the market goes down, you're trying to get in for its overall buying at 23, right around that 24 area. I wouldn't look at being able to get in as of yet, but I am interested in being able to get in long-term overall. So that's the overall position that I'm paying attention to. Now, if the market just explodes up, with the market being in the sell zone on the 2 hour, sometimes you got to live with that and just kind of get away from it because we don't want to buy high prices in the sell zone. So that's the overall move, looking at the overall pair. Let's take a look at the currency strength meter. Currently right now, what we're looking at, we see that the pound is the overall pair that's basically doing very strong. We see that the New Zealand dollar is the overall pair that's doing very weak. So I will look at the pound New Zealand for the overall pair for it being able to get in and being able to trade first off. And then after that, being able to pay attention to what's happening with the pound Australian dollar for its overall movement. If we're looking at this trade notes based off of that overall movement. Going back to the U.S. based pairs, we're going to take a look at those real quick. We talked about how the pound United States dollar was going to end up falling down to these 2 different support levels, and then after that starting to push back up. This was pretty much on the money. Market went down to 133.20, went all the way down literally to the low of 132.79 and 132.80, then started pushing up past this counter trend line. Now, what does that mean? Long term, remember we said that this market is going to end up moving up to 135 for the overall pair, and a little bit further than that off of the daily. So we're looking at this pair to be able to go up to at least 138 for this overall movement. If we go back to the 2 hour and we just focus in on what's happening off the 2 hour. And I don't know if y'all can hear my son, he's pretty pissed off. We can see that this market, based off of this overall movement, is going to end up moving at least till 134.60 before before it's slowing down. So right now we're talking about at least 150 points for this overall movement. if I'm looking at any type of trade for us being able to do anything, it will be to buy. I'll place my stop below the support level, and then after that, being able to trade it to the upside. I do like that trade for us being able to get in. This will be basically the overall scalping trade that I will look at today. Put my stop below 133. That'll be about 84 pips. I will look at being able to buy all the way up to the upside. Let's see. I'll look at buying all the way up to the upside for this 2 hour. And you're trying to get that, it's about 75 pips for us right there. You want to be able to get in. You want to take it all the way to the daily D extension to be 135 for that. 138 for that overall pair. You want to do it towards the resistance level. You can go 130, well, basically 135, and be able to get out at that level as well. But the entry will be right now if you're looking at being able to get in. Okay. Next pair. We're gonna focus in on the small little pairs. We talked about US CAD, how we didn't want to get into it until it actually ended up hitting the daily D extension. Currently, right now, we're not there yet. We're getting close, but we're still not there yet. I wouldn't pay attention for it being in, getting in that pair. Looking at US yen, we said that we wanted to be able to sell. Well, we wanted to be able to sell if this market ended up breaking out and retesting to the downside. That did not happen. The market ended up pushing out of this overall zone, pushing right back up to 104. Once it pushed up to 104, then it rejected again towards the downside. Now that could spell out good news for us being able to sell. But overall, this support level of 136.75 is not the strongest of areas as of yet. So not trading that pair because it's still in consolidation. Euro United States dollar has started to show a little bit more consolidation as well for its overall movements. We look at a counter trend line break. Once that starts to happen to the upside, then after that we can pay attention to it. We do have that slightly for the movement. And the biggest thing that we're looking for is how this market is going to end up moving to 122 all the way up to the upside. And then after that, obviously, we're looking at the 123 levels all the way up to 125, basically going back to 2018 and 2017 overall highs for that movement. And so we're still looking at buying this long term towards the upside based off of that movement. We look at what's happening with the Australian dollar. US Swiss franc. US Swiss franc is still bearish. We're still not in the best position to be able to get in at this particular point in time. I wouldn't pay attention to being able to get in on this. I wouldn't look at paying attention for us being able to get in towards this pair as of yet, unless you already got in when the market ended up breaking the overall support at 90. If you got in with the market breaking the overall support at 90, then congratulations. Quite frankly, stay on that trade and be able to look at it going to the downside for that overall spot. At this particular point in time, I don't think there's enough value to be able to get in at 86 for this. To 86 for this overall level until it ends up getting into the sell zone, which kind of matches up with what I end up talking about with the US dollar index, and we're saying that it can end up reaching a high price. So right now, not waiting for that overall pair as of yet. There's better opportunities to be able to get in with other pairs. So we're not looking at that as of yet. Pound United States dollar, we already done talked about. Let's take a look at the New Zealand dollar, United States dollar. Remember, we took a buy on the New Zealand dollar, United States dollar on Monday. Let's see what can we make out of that overall position. So market is in the buy zone. We know that the market is in the buy zone. We looked at basically being able to get in based off of a counter trend line break. The market actually ended up dipping from there. Once that ended up happening, it actually ended up making a new lower low. Remember, our first get out rules when it comes down to anything is we look at the lower low first, and then if we have to get out based off of that, then we get out. And that's exactly what ended up happening. We ended up taking a small loss on this pair because this market actually ended up breaking the overall low because our stop loss was at 70.60. If you stayed into the market hitting 70.60, then quite frankly, you would have got stopped out about 6 hours ago for that overall move. But once again, once we've seen that this market ended up rejecting off of this overall spot, and rejecting hard, and that was our first identifier that we need to get out for the overall pair. Took a small loss. Sometimes that happens, but what are we looking for? It was still thinking that the U.S. dollar is going to end up being bearish, and we think the New Zealand dollar is going to end up being stronger. Look for a counter trend line break to the upside, and after that, look at being able to buy it toward the upside. If the market remains to be above 70.60 and gives you a better position, then the extension that we're still looking at is 7,300. It just means that you got better value now for us being able to get into that. Okay, so done with those pairs. Let's focus in on XPX NAS 100 and US 30. I'm going to start with the XPX 500. So what are we paying attention to here? Currently, right now, this market was bearish, and it was bearish for a few days. And it had a strong push to the downside. But overall, what do we know? This market is in an R3 zone. This market is in a push zone, meaning that we expect the market is going to end up slightly pushing up long term anyway. Now, if we go based off of conventional wisdom, we'll say that the overall counter trend line break is right there, that it needs to break out of this overall area and get past 72. If we're looking at this for saying that we cut this wick right here, then we're waiting for a counter trend line break to be able to go up top. Now, ultimately, what I would love to be able to do is wait for the stochastic to get all the way down to the buy zone and then be able to look at being able to buy at that particular price. If there is a move to the upside and then we have a sentiment change, then after that, I'll look at being able to buy it, and I won't hesitate for us being able to buy to the upside. Remember, our overall zone that we thought it was going to go to a 3760 for it being able to push to the upside. Now, what has been driven, what's making this move be driven so quickly to the upside? Well, it goes back to what's happening with Pfizer. It goes back to what's happening with all the medical information for it being able to get everything situated with the coronavirus cases. But overall, this market is still considered to be bearish short term for its overall movement. So it has to prove it to be able to break out for that overall position. What are we looking at for the 2 hour? If we look at the 2 hour, we see that this market was going inside of this overall triangle, broke out below the triangle, started to push out, and currently right now is at basically a point of control, which is at 36.72. As long as it stays above this point of control, then after that, we'll start to see it start to rise back up. If it starts to rise back up, I will literally start looking at, can it break past the 36.80 level? If it breaks past the 36.80 level, then it's going to go to 37 to 37.20 and try to attack these highs. And then after that, go from there. If you're looking at being able to buy short term, if you're just scalping the overall market, I would scalp the right here first. You see if you can get anything out of the 36.95, somewhere around there. That'll be plenty enough points to be able to ride off for the overall move. If you're very brave off of this one, I will look at trying to get out right here. But understand that the stochastic is losing ground and it's in the no trade zone. So that means that this trade will probably not be the best trade to be able to get in, especially if sellers believe that the market is still considered to be bearish. If we're at that position, then quite frankly, I wouldn't look at trading it until that actually ends up happening. Okay, so that's where we are for this one. But we do have a counter trend line break. We do have the market basically hit the buy zone a little bit earlier and then start to push up. If it remains to be above the point of control, then after that, I will look at being able to trade it. US 30. US 30 for my overall EA position. Did not get into it. The reason why I did not get into it was because we're looking at the same type of triangle. Now, this is the same ascending triangle that we're looking at for its overall pairs, but a different type of movement. Market broke out of this overall position to the downside and then actually moved from there. Now, what we can actually do is this. We can move these right here and kind of adjust for the overall low of this position. So we're looking at that as the overall move, and we're looking at that as the overall high. If that remains to be true, this is your natural support line and this is your natural resistance line, then we have a little bit more room to the upside on this overall pair. Does it mean that it's going to explode all the way up to the upside? No, it just means that we can see that this market has been making this subtle movement over and over again, and after a while, it's not going to end up making sense to be able to get into this position until it actually ends up breaking out of one direction. And once again, I'm trying to show you what that looks like. We can see that the market end up hitting resistance up here, falling down to support, end up going up to resistance up here, falling down to support right there, resistance, support, resistance, went back up to resistance again, hit support, went up to resistance. Now we're at support. So the expected move is that we're going to end up going up to another resistance again, which means that we're probably looking at 30,330 as a natural position to be able to get out. If you're looking at being able to buy, that's about 300 points from here. The question is, are we going to end up getting that explosive movement to the upside? We can see that the stochastic right now is still in the no trade zone. So once again, if you do get into this pair for us being able to buy, you just got to be sure for us being able to get into it. Remember, the underlying trade to this one is to the upside, so I would be banking to the upside, but I can see that this ascending triangle from the daily is broken to the downside, which means that you should be looking at overall sales. So anytime that the market is very cloudy like that, I don't care what my EA says. Sometimes I just decide not to be able to trade it from there. I think the risk is too much when it comes down to being able to say if I want to get in or be able to get out based off of that overall movement. For me, right here, this would be purely a scalp if I'm trying to get in. And quite frankly, if we go based off of the two natural rules of support resistance, you need to buy at support and then sell at resistance. We're basically in the consolidation no trade area. That's the reason why I would not. And that's the reason why I would not pull the trigger on this position as of yet. This market moves too quick to be able to make bad decisions. So I'm not in on that one. All right, last one today, Nas 100. If we take a look at this pair, what is going on? We can see ultimately that this market has done the same thing. We had that W pattern that we talked about. We got that movement all the way up to 1275. Remember, we were trying to buy this all the way up to 12,450. We never got to that particular spot as of yet, but we do have a counter trend line break as an overall movement. Now, this has been an indicator of how the market has been moving. If that's the indicator, then we're saying that we should be looking at bullish movement overall because we do have a strong counter trend line break. The question is, when should you have gotten to that counter trend line? You should have got in when the market was at 12,340, which is almost 200 points away. Did we get another movement? Yes, we did. So quite frankly, the market is at 12,515. What are you going to see? We're probably going to end up seeing that this market is going to end up having a rocky road trying to move up to the top. You're trying to get out. I would say 12,645 is the overall number. We can clearly see based off of the overall movements that, quite frankly, if I had my buy trades on, I probably would have got placed in a buy right around here for us, that overall spot. The question is, do you like to buy? I rejected the sell yesterday for us being able to get in. And I'm kind of upset about that one. I actually rejected the buy right here for the overall movement. So I missed out on two different trades on this overall pair. If we're looking at this overall pair, is this a strong enough move to be, oh, that's US 30, sorry. Here we go. Nas 100 never gave you a chance, but it did bounce back up to this overall position. If you want to look at being able to buy, you're buying up to the highs of 12,643. This should be a very, this is one of those ones to where if you look at being able to get in, you have to be very cautious about how you end up getting in. I wouldn't bank the farm. I wouldn't do anything else like that. I would look at being able to get in with a low, for low input, and then after that saying that you believe that the move is going to end up moving up from there. Currently, this market is saying that it's at 12,545, and this market is saying that it's at 12,525. So the question is, which one is true? And we end up going from there. But we'll pay attention to it. If you don't feel comfortable with it because the market is in a consolidation, no trade zone, don't trade it, just like always. And we'll end up moving on forward from there. I probably won't trade it just based off of that overall position. So if you did mine freeze? Okay. I don't know if the people could be able to see this on Facebook, but we'll go from there. So you like what we end up doing, please make sure that you like the Carter Cowell Capital Business page. Please make sure that you subscribe to Trade with Travis on YouTube and Carter Cowell Trading on Instagram. We're getting ready to switch over everything to Carter Cowell Academy business page, so everyone can be able to see it from a business page stature and be able to go from there and be able to take a look at that. I do appreciate everyone's time and effort for being able to stay along with us and be able to watch this. Like always, if you want to be able to hop into one of our free webinars, you can go to cartercowellcapital.com/start here and be able to go from there. Like always, plan your trade your plan. I see everyone tomorrow being able to look at some more trading pairs.